Welcome to Fintech Uncut, the quiz show with candid commentary on the biggest fintech and financial services news of the week that was. Disclaimer: this show is created purely for entertainment purposes and contains segments of sarcasm, satire, parody, and humor, even if you don't think any of it is funny. The creators do not accept any responsibility or liability for the accuracy of any content shared and reminded you to always fact-check everything yourself. And now, it's over to your quiz master.
Hello everyone, welcome to Fintech Uncut, the quiz show with candid commentary on the week's biggest fintech and financial services stories as usual. The wise guy, the other guy, and for a full episode this time, Judge Mary.
Yes.
Let's go. My name is Rick Kuckelbergs, your host of the day, and let's kick off with a first question related to the recent fintech and financial services stories. This week, a fintech company enthusiastically announced that from now on, more customers may have to call their service desk. That's right, on the phone, saying it is part of improving their service. What was going on? Oh, Andrew's buzzer works as well as the one of Chris.
Silence builds all the suspense, Rick.
I reckon this must be something to do with Apple, and that Apple is now a financial services company. It's got credit cards, debit cards, savings, investments, many other services. And I've always wondered, what is Apple's phone number, which is something that maybe they've now started. And in fact, I don't know if you saw, but Apple, in the first 4 days after it launched its savings account, got over around $1 billion of deposits, which is pretty impressive. But then, mind you, they're offering 10 times more interest. But we talked about this before, so maybe this is old news. But is it something to do with Apple's opened a call center finally?
No, it's not.
Oh.
I think it's got to be something ChatGPT related. When I open up my LinkedIn feed, all I'm seeing is AI, ChatGPT, and a progressive fintech must have gone, you know what, we're going to do exactly the opposite. We're not going to use ChatGPT and AI interfaces for our customer service, and we're going to make people phone real people. That would be a very positive thing to do. Although if you ever tried phoning my bank, you can never get hold of a real person anyway, and I'd prefer a computer.
And if you get hold of them, they can't answer and forward you to somewhere else because they don't have ChatGPT at their hands.
No,
that's not the right answer.
Also, the question is, how do you do this in terms of, if you have a call center, maybe a call center run by ChatGPT, does it actually feel like you're talking with a human or just something that doesn't understand who you are? I mean, chatbots are very basic. I've used quite a few. And, I just wonder these days whether tech companies and fintech companies have forgotten that the human interface is quite important. So I don't know. Who would be launching a customer service human interface? I'll tell you who hasn't is Atom Bank. And I remember when Atom Bank opened in Britain, a challenger bank, they said the only reason why you can call us is if you have a technical malfunction, but nothing to do with your account, because we're only there to sort out technical issues with humans. Whereas when it comes to your account, the whole thing is automated. It's a very strange world.
Looking at Andrew's face, that was a really interesting answer. And unfortunately, I was distracted by Mary's dog. Mary, was that Chris right? Was Chris answer the right one?
Chris's answer wasn't right, but I know how bewitching my Maltipoo is, Rick. So I understand.
I'll have to watch or listen this show then.
I think that it's not a fintech, but the CEO at Commonwealth Bank in Australia had caused a bit of an uproar that hit the news this week because he's called all 49,000 staff back into the office again, which of course his staff are revolting about. But maybe he's the one who said, people must call people because he wants everybody back in the office for that, maybe?
I didn't call them all by phone.
Well, I think he must have emailed them to tell them all to come back into the office.
Yeah,
No,
we're
it's not the
seeing
right
more and
answer.
more of that. You know, we've seen Jamie Dimon saying the same, and others, which surprises me, because why do you need to be in an office? But there you go. I did see an update this week about Klarna, and that Klarna's done something with its app to give an opt-out for Brits who want to get rid of taking on more debt. But I didn't see it with the customer service number. But is it something to do with Klarna?
Yeah. And the link with the contact service number is that people can opt out from the buy now, pay later functionality of paying in pieces. And if they want to opt in again, they have to call the service desk, and they will be guided to the right channels also for people with financial problems, etc., to make sure that they can opt in again on a responsible way.
And that's interesting
Right
because
answer.
you know, you've seen that move with gambling, for example, with Monzo a while ago, which is, you know, you can opt out of being able to get onto gambling sites. And so I think it's becoming more interesting how fintech is now starting to move more focused towards making sure people don't mess with their money, basically, which is a good thing.
Yeah, and essentially it also shows that Klarna is, at least my perception changed, making them more of a payments tool than a credit tool. So that's a good thing. And that's also what I've been saying all those years. So
Interestingly, in that same article, they were calling on other debt providers like credit card providers and things like that to consider implementing something similar, the same thing, you know, along the lines of physically letting people opt out. I know a lot of credit card companies. I opted out of a particular credit card company, increasing my my credit limit every year, because as I used my credit card, they would just carry on up my credit limit way more than I needed, because this particular company is a charge card, so I make sure I pay the balance off in full every month. But they gave me, at one stage, I had an insane credit limit, and I went, no, just opt out. So maybe more of that in the future would be a good thing, some responsible credit.
But being truthful, you wish you had it back now, don't you?
Not at their interest rates. Trust me, this particular organization, fantastic credit capabilities, but if you don't pay it off in full, I think that they're it's something like a 56% APR, something like that. If you don't pay it off in full every month, you don't. Yeah, it's one of the original charge cards, and I've never ever paid interest on any balances with them.
Marion, does it deserve some pity credits?
It does deserve credits, because Andrew did point out about how the call to action to make other buy now, pay laters do this. And I really do love the idea of a pause button, because impulse shopping is a real thing. But Chris still is winning this round. Chris 8, Andrew 5.
All right. Next question. I Googled the best moment to leave a startup, and this is what I got. You work in a toxic culture. You've stopped learning. You feel undervalued. You feel burnt out. Your company isn't financially stable. You're easily bored by your work. You want to work in a different startup stage. Now, I'm not sure the reason for this week's most impressive departure is in this list, but who am I talking about?
Work that time. Are you talking about the CEO of WeWork? He's just announced his departure, and their stock dropped almost 25% on the announcement. Personally, I didn't even know that WeWork was still going. I thought that folded even before COVID.
Yeah.
But apparently, yeah, it's still a thing, and their stock tumbled because their CEO said he was leaving. That was quite a high-profile departure.
That's not related to financial services.
Well, it's money, you know, big investment, startups.
It's startups and tech, but you said the best. So is this
Well,
related?
my favorite departure of the day, of the week. Yeah.
Yeah, you said the best. So is it related to the death of Tina Turner? Because I actually cried for 2 days after she died, because she's a favorite star of mine. and she
That's
was
why I didn't answer your phone.
Simply the best.
she was simply the best. And what I didn't know, and maybe you didn't know, is that she wasn't the first to sing that song. The first was Bonnie Tyler, and she sang it 2 years before Tina Turner. But you know, the departure of the week has to be Tina Turner.
That is correct. That is the departure of the week, but not the fintech departure of the week. I should have rephrased my question, perhaps.
Well, this is it. You didn't actually even say fintech on there. You said who are you talking about, and I
That's
thought,
what the show is about, Andrew.
well, it's financial services. It's everything related.
Exactly.
That's
Yeah.
why it's
Yeah.
called
No,
Fintech
yeah.
Uncut, for God's
I
sake.
mean, maybe we're broadening.
Well, money makes the world go round. We know that. Another big departure this week, a company called NewChip, which is one of the second biggest accelerators in the USA. It is related to fintech and financial services because they've got over 1,200 startups in their portfolio. And they've just filed for Chapter 11. Their employees got together and staged a walkout to force their founder out. And now thousands of startups have been left high and dry because of that. It's really going to have quite a large impact on the ecosystem. They're second only in size to something like Y Combinator. That's to do with fintech and financial services, and you didn't know that one.
Talking of Y Combinator, and I think I can beat you here, Andrew, is
Again?
the departure of the week must be Tom Blomfield, who was one of the founders of Monzo, who's moving to San Francisco to join Y Combinator.
Yeah.
Although, interestingly, many San Franciscans are actually leaving America to come to Britain. And it's because tech workers have grown disenchanted with San Francisco, according to a banker at Coutts, which is one of the high net worth banks of Britain, like First Republic, but still viable. And she was saying it's because in San Francisco, it's full of homelessness and drug use. I don't know if you have any commentary on that, Mary, but you've just been in San Francisco. So did you see any issues on the streets?
Yeah,
It's
I mean,
still going.
there are definitely issues on this street. I didn't really leave the conference very much. I was just there for a day. It was for Finovate, but I'll say some of the startups were flexing like, hey, yeah, we love San Francisco. So there are a bunch of haters right now, but they're still bullish on making that their home, at least the startups at a fintech event in San Francisco.
But I think, Chris,
Going back to the question.
you can't talk about Tom Blomfield without talking about Anne Boden, the Darling of Starling.
That's a real departure for me. Tom Blomfield, for me, that's a Brexit.
So the big news, big departure, big surprising departure was Anne Boden announcing that she's stepping down as CEO of Starling. It's going to be very interesting to see. I personally think that it's a sign of a very mature founder that can recognize the point in their journey when they go, right, now it's now a going concern, it's viable, it doesn't need me at the helm anymore, and they rather, a lot of them will go on to take either the president of the board, chair of the board role, something like that. It's not clear what Anne is going to be doing. She might be going and doing something else, but we know that she's leaving. But I think she's obviously identified that it's the right time for her to leave, and I wish her very well. She's done fantastically at Starling, just as they've announced record profits, sixfold over last year's.
Yeah, I find it very weird, though, that she is stepping down, saying that there may be a conflict of interest between her being one of the highest stakeholders and also chief executive. But that's quite normal for a fintech startup. So I don't quite see what the reason is why she's moving on.
I understand it because I think you have different people for startups, scale-ups, and mature companies. And in her case, it became a mature company. And if she's a CEO as well as a shareholder, I do see the conflict of interest in a way at a certain moment in time. You're not looking for an entrepreneur to lead the company, but you need a manager to lead the company. And that may be one of the reasons. Now, I've been discussing this with another influencer in the industry who said, because I followed the reasoning of Andrew, but she found it very hard, or he found it very hard to believe that N would just leave it to others. So if another CEO would come, it would probably be according to the rules of the game.
Well, I think like with all things related to Anne, there's something going on in the background. I mean, you know the story of why she and Tom Blomfield fell out with each other, don't you?
You're talking about the bucket of chicken.
Well, actually, it was that Tom had told Anne that most Silicon Valley startups have a thing where everyone goes round to the CEO's house for Sunday lunch. And she said that, okay, but you're cooking. And he cooked one chicken for 10 people. And so that was the worst thing ever. And basically it was the worst dinner party ever. And at that point, they
was not in her book.
Yeah.
That was not in Anne's book.
That wasn't Anne's book, actually.
Was it?
Yep.
Uh-oh.
Did I read about the chickens?
Because I actually told her off. I said, you shouldn't have revealed what's meant to be private in public.
Oh, you should always.
I would always remember that.
No, I felt that was out of order.
I don't remember that. And those are the kind of details I would anyway.
Rick
It is the right answer. And
Rick
Boden
is
stepping down was for me the biggest departure of the week.
Well, I would have given you the most points, but I won't since you're the judge. And Andrew 8, Chris 6.
Even with the chicken story?
Even with the chicken story, even with the caveat of like something bigger is going on.
Next
Andrew
question,
still
friends.
got it right. Okay.
Question number 3. Perhaps Anne could be an example for another big player in the market on which Speed Invest's Thomas Lecce commented this week. New investors would say, we don't want to invest in a company where we know there's a highly demotivated management and pissed off older shareholders. Which company am I talking about, and why would the CEO leaving the company perhaps be a good idea?
Is it Britain? I mean, after Liz Truss and what's going on these days in Britain, you know, who would want to invest in it? Highly demotivated management, yep, the government, and pissed off shareholders, the citizens. Mind you, it could just as easily been France, Italy, Spain, Belgium, America. I don't know.
I'm gonna make it a bit easier. It's not Britain, it's not Prince Harry, and it's not Elon Musk.
Oh, damn, not Elon Musk. If it wasn't for the fact that it was a private company, I would have said Twitter after the huge Ron DeSantis debacle. Mary, do you want to comment on that? I mean, Ron DeSantis...
You said it right with debacle, so...
700,000 people try to log on to it. It melted Twitter down, and Twitter went down. Elon Musk had a bit of egg on his face, although he seems to be okay with it. But then again, he has got shareholders, so it can't be him.
No.
Has this got something to do with Revolut? You know, we bring them up virtually every single week at the moment, and their struggle to get a banking license. And that would be something where I think demotivated management comes into play, and so do pissed off shareholders come into play. Nothing to do with Revolut and their application for a license?
Could have been, but isn't. You're getting close, though.
I must admit, I thought it might be Revolut, as Nick Stronsky was whinging about all the problems he has in Britain, being based in the UK during a conference recently in Brazil. And, you know, his whining has resulted in, so far, no issue of a banking license, which they've been trying to get for 2 years. But if it's not Revolut, it's probably something like Revolut, such as N26, which has also been caught out quite a bit on having issues internally with executives leaving, cultural issues, and they just postponed their IPO, or rather, I'm not sure whether they postponed it or whether they'll ever have an IPO, but it looks like they've got major issues internally as well.
Absolutely. And that is the right question.
Answer even.
Okay, I
That is the
wasn't
right
sure how to
answer.
score you, Andrew, but that just got you a 6. Although I have to tell you, Chris got an 11.
Oh,
But it was a pretty long article with lots of insights actually on the situation of N26 and the problems that are going on. What surprised me the most was that a decade ago they forecasted 100 million customers, and if you look at the situation today, they're at 8 million. That's a very big deviation from initial expectations and the promises they made to shareholders or potential investors.
but I mean, they're no longer in the UK and they're no longer in the US. They've pulled out of both of those. So I mean, their market that they're operating in is highly regulated, mainly concentrated in Germany, isn't it? And so it's not really friendly as an IPO market anyway. So yeah, I'm with Chris. I don't know whether they're ever going to IPO anytime soon.
Well, on the other hand, you have smaller banks or local banks that are IPO'd as well. Starling is making a profit, but they are active in how many markets too?
Mainly in one, UK.
Yeah, mainly one indeed.
But having said that, they have an enterprise business for selling banking as a service. That's the second business. And I think what's interesting is that a lot of the
And
time,
they have something in Ireland as well, no?
isn't Ireland part of Britain? Sorry. Anyway, it's a bit like America's part of Britain, as is Canada. But anyway, it looks like they're trying to, like all challenger banks, overcome the issue they have today, which is that the business model isn't really challenging enough. And that's where I think a lot of them have problems. Giving Andrew kudos, Starling has actually broken out of the pack. I'm not sure whether the others have.
Yeah, that's consumer market. Last week, one of our guests was the CEO of Clearbank, a completely different business, of course, but also a very recent bank and making a profit as well.
Well, the thing about Clearbank is, and also RTGS Global, which is another of Nick Ogden's banks that he's founded, is that they actually are addressing a different problem, which is to do with bank-to-bank and business-to-business issues, rather than trying to compete on the high street, or these days the digital street.
And because of the products they offer, they can't even get a banking license in continental Europe until they start offering loans as well, apparently.
Yeah. So it's just interesting to note that, if you're trying to be a challenger bank to the mainstream consumer banks, I'm not sure that's the right way to go. I think there's lots of other opportunities out there that are far more lucrative.
Let's call them challenging banks from now on.
Challenging banks. 3 more questions, Rick. We got to do it in 10 minutes or under. Pick up the pace, boys.
Bipolar disorder. That's my.
Hold on, did we get any points?
Yeah, I gave it to you like 5 minutes ago.
Okay,
11,
sorry.
Chris. Andrew, 6.
I lost the plot with Rick's, rambling.
I know that, Rick.
Let's get another Rick next time. So, next question. The bipolar disorder, formerly called manic depressive illness or manic depression, is a mental illness that causes unusual shifts in a person's mood, energy, activity levels, and concentration. These shifts can make it difficult to carry out day-to-day tasks or make the difference between a question and an answer, maybe. I don't know. Seems like organizations can suffer from it as well. Do you know what I am referring to?
Cameron Winklevoss went on a bit of a tirade recently, blaming the US regulator for being a bit bipolar, if you want to say it that way, having double standards, blaming the US regulator for the banking crisis, saying that if things like First Republic had been a crypto bank, they would have been all over them and shut them down months before it actually came to a head. So is it the US regulator?
No.
I reckon it sounds more like the European Central Bank, who, if you don't know, celebrated their 25th anniversary this week, which makes it sound quite weird to think, the euro and the European Central Bank is just 25 years old. And they are kind of schizophrenic, which fits with your question, Rick. As on the one hand, they're trying to create an integrated currency and economy across 27 countries that don't want to be integrated or managed by the European Central Bank. So is it something to do with the ECB's 25th anniversary?
No, fortunately not.
Well, they definitely have bipolar anyway.
There's another large global watchdog, the International Organization of Security Commissions, IOSCO. What a bloody acronym. They called on the UK to regulate crypto in the same way as stocks and bonds, whereas just last week, the UK MPs had been calling on crypto to be regulated as gambling. So there's a bit of a two sides of the same coin there with the regulation requirements in the UK over crypto. Nothing to do with crypto?
Nothing to do with bipolar syndrome either, because you're talking about two companies with another opinion. All right.
It must,
That's a new favorite moment.
it must be to do with something that comes first, as in First Republic's just found itself shedding 1,000 people after JP Morgan took them over, and First Citizens are whinging about HSBC poaching staff. So is it one of those two stories?
Yes. Did I completely mix up two banks to find the perfect question?
Lots of firsts there.
Uh,
Yeah,
yeah. So what was that all about?
well, HSBC took over Silicon Valley Bank UK for £1, and they already have, as we discussed in previous episodes, banked millions of pounds of profit as a result. But they've also been stealing people from the commercial banking business, apparently. And First Citizens, who took over the US side, are saying that that was out of order. But equally, there's a lot of stress and uncertainty, according to a spokesperson, talking about First Republic within the JP Morgan First Republic takeover, and they've shed a load of staff as well. So I don't know which one it is, HSBC or JP Morgan.
In that same article, there was a rumor, because it's alleged that HSBC was colluding with former employees of Silicon Valley Bank to actually structure the takeover in such a way that those employees would be part of the new organization once HSBC took them over. So there was maybe a little bit of insider hanky-panky. It'll be interesting to see if this does go to court, if they do end up suing HSBC and it does go to court. It'll be interesting to see whether or not these alleged rumors come true or not, and whether or not there was some dirty dealings underneath there.
That's my new phrase, insider hanky-panky. So you get a 7, Andrew, but still Chris comes in hard with the 9.
I know the answer to the next question. I definitely know the answer to the next question.
You don't even know what the question is.
He's losing his confidence. This is what I do too.
Yeah, this is
Stand
it.
in a mirror and
Pull
say,
myself up to go. I know this one.
You may have noticed I've been a bit distracted, so it looks like I need a holiday. And as from tomorrow, that becomes reality, because I want to ride my bicycle. I want to ride my bike. I want to ride my bicycle. I want to ride it where I like. But I'm not talking about my situation. This was literally demotivation for an executive in yet another big tech to leave the company in the near future. What happened?
This is definitely about your situation, because you said the motivation for an exec in a big fintech. Well, the banking scene, the CEO of the banking scene is going on a bicycle riding holiday and leaving his trusty sidekick to take over the banking scene breakout bites next week for a fascinating session. So that's massive news. That's huge news. I'm the trusty sidekick, by the way.
But I'm not. I'm not. I mean, I'm not representing a tech company in a way.
But you're the most important financial services influencer in the whole of the Benelux region. So yeah, that
I won
counts.
this quiz only once, so no.
I
Chris.
I must admit the Benelux fintech sort of scenario, like there is only like one person there. So anyway, is this something to do with the wise guy? Because like I am the wise guy, so I'm thinking this might be the fact that the Wise, one of the fintech companies that I use all the time to do cross-border payments, has seen the loss of their chief financial officer because he fell under a bus when he was cycling recently. Sounds like it's related.
It is.
That was really tragic, that. But surprising for me in that story was that he's announced his departure, but he's only leaving in March next year. So,
well, that's how long it takes to find another wise guy.
Well, we have one, but maybe not the best chief financial officer. I don't know.
No, I'll be rubbish at being a CFO. I'll be much better at being a CMO or a chief troublemaker.
Yeah. Talk about trouble, Mary. Is he in
Points?
trouble? Or did he get more points than
I mean,
Andrew?
generally, I would say Chris is in trouble, but not, not for this particular round. Chris has 8, Andrew has 7 for pointing out. Yeah, that's, I mean, what a terrible accident. And it's been a while since it's happened. So it's curious.
All right.
And
Right, last question.
we should stress we wish him all the best.
Yeah, we do.
Yeah.
The last question. Does Andrew still make a chance, Mary?
I'm always in with a chance. I'm always in with a chance. I'm always
because I keep these points relatively low, yes, he does have a chance, but it would need to be like a strong 8 points more than Chris.
And we should say that Andrew is well known as a chancer.
All right, last question. You could use this for early forecasting for inflows to American cities, which will correlate with overdoses, said Eric Jardine. Now, I cannot give you the expertise of this academic because that would make it too easy for you. But my question is, what is this in the mentioned quote? So you could use this for early forecasting, which will correlate with overdose.
I'll kick this off because I think, listening to your question, is this to do with India that's just withdrawn the 2,000 rupee note, which in context is worth about $24 US, because they withdrew the 500 and 1,000 rupee notes 6 years ago. And in fact, over the last 60 years, they've withdrawn money and demonetized about 5 times. And that's why most Indians actually own gold rather than monetary notes. And in fact, what's really interesting about India, according to analysis by Chainalysis, is that they now also have invested hugely in cryptocurrencies. There's about $40 billion worth of investments in crypto in India. So it must be something to do with the whole thing going on around the Indian marketplace.
You're getting close, but you're looking at the wrong direction there.
Is this anything to do with the report by Andreessen Horowitz about the opportunities in healthcare mixed with fintech? So fintech for healthcare. And in their article and their report, they were saying that for every $1 spent in a hospital, 25 cents is spent on admin tasks to collect that money. And they also quoted that 41% of US adults have healthcare debt, and 1 in 5 of those never expect to be in a position to pay it off. I mean, this is Mary, healthcare in the US. How does anybody afford it?
I don't know. I mean, there's shocking bills that completely ruin you.
Not to do with that report then?
No, but thanks for haunting us. And me personally.
It must be to do with the announcement by Hong Kong, which is actually starting a new licensing regime for virtual asset providers from June 1st, and it will allow Chinese potentially to invest in Bitcoin, Ether, Ethereum, and other cryptocurrencies. And this is a massive pivot because China spent so long trying to ban these currencies, and yet now they're trying to make Hong Kong the base for crypto trading.
You're getting closer, much closer, but you're not there yet.
I would say if we're talking about crypto trading, it's concerns over the digital dollar, where people are always worried about the privacy concerns, about people being able to track their over-the-counter spending. So maybe it's something to do with digital currencies and being able to track where those are being spent on. May be related to Chris had just mentioned chain analysis, and they had released some reports showing new findings that crypto is being used to fund the global trade in fentanyl, well, the raw materials that go into the chemicals that go into making fentanyl. And about $8.2 billion of that was flowing into America, those goods, but not even on the dark web, right out on the internet, just in public view.
Yeah, but if we think about that story, and I mentioned Hong Kong, there was a story this week about Chinese chemical companies actually producing the ingredients for fentanyl and accepting cryptocurrency as payments. And fentanyl is an opioid drug, which is causing massive problems across many countries, particularly in the USA, because it's 100 times more potent than morphine. So maybe it's something to do with the Chinese cryptocurrency and drugs.
Yeah, absolutely. But that's what Andrew was saying, no?
I wasn't mentioning Chinese specifically. I was just saying cryptocurrency and drugs.
Well, you know what?
You didn't mention China. Yeah, exactly.
You still won that round. I gave you 11. Chris, 5. Still, it puts Chris as our winner, taking the title from Andrew from last week, but only by 3 points. So don't feel too good.
Congratulations, my friend. All right. That was it for this week. Thank you all for watching or listening. I cannot wait for more international fintech news coming soon. And don't worry, I will be back on Thursday from my bike trip. If you like our show, make sure to register on our website for the newsletter to be the first to know about a new episode, and have a look at our merchandise, because Fintech Uncut is worth being there every day of your life. Don't forget to subscribe on whatever channel you're on. This was the 24th episode of Fintech Uncut. We hope to entertain you, your colleagues, your friends, connections, followers, your cats, rabbits, and dogs, and many more very soon again. Bye-bye.